You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for a little bit of the Option Block, what the cool kids call the old OB episode duet here for this week. So no shortened holiday week this week. We actually got both episodes in, which is fun. A rarity these days. Getting a lot of holidays, which, hey, I'm not complaining. Keep them coming, baby. But always fun to get double dose of OB in during the week. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever exciting, at least we tend to think so, Options Insider Radio Network. I guess you guys think so too, because like I said, we're coming off the hottest month in the 15+ year history of this business. Crazy town. So you folks liking yourself some options content, keep binging. I don't mind the bandwidth bills. It's all for a good cause at the end of the day. And of course, if you want to go above and beyond, you want more in your life, not just the shows we're coming at you with on the on-demand side. You want, of course, exclusive pro Q&As. We did a double dose of those this week. We had the Rock Lobster actually joined us this week, as well as the short vol and Hall of Famer, Blackjack Hall of Famer, I should say, short vol legend, Mr. Don Schlesinger himself. That's always fun to get him. Actually, a surprisingly optimistic and upbeat Don. That was a little surprising. So if you want to see what the heck I'm talking about, as well as get Options Oddities coming up tomorrow and all the giveaways coming up soon. The June box. Get your shit in the hat now. Do you want to win that and a whole bunch more? Of course, live access to everything we do here on the network and a whole bunch more. TheOptionsInsider.com/pro, or for you cool kids, /secret club. Just forget I said that if you're not going to sign up for it. That's just for me and you here. Don't tell that to any of your friends or anything else like that. Just for you. And you know who else is just for you guys? It's my co-hosts, my partners in crime, my compatriots here on the old OB. Let's go around the horn. Let's start in the land of optimism, with rays of sunshine dancing upon us. Yes, it is St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show, sir.
Great to be here, as always.
It is great to be here. I can agree with you, especially this week. I'm feeling a lot better than I was when I was doing the show this time last week, listener. So that's always fun. Puts a smile on my face. You know who never has a smile on his face, because he's always living in that dark and stormy land of the shores of Maine. He is the Rock Lobster, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. How go the dark and stormy shores, sir?
They're sunny and bright today. I have to say, sunny and bright in Maine. The Clam Pirates are out at 4:30 this morning. They came in, they made their $1,000 and left as the tide washed them away.
You got to really want your clams to get in there at 4 a.m. and start digging through the mud.
Well,
what are clams going for these days? Everything else is expensive. I'm sure clams are expensive too.
Well, it's actually one of the few businesses fishing businesses you use very little gas, right? Because they just, they cruise from the drop to the flats, so they're only using nothing, right? And a small outboard motor. The boat parks on the sandbar, and then they dig in the mud till the tide comes in like 4 hours later. So a bushel is getting them wholesale $2.50 a bushel now.
$2.50? I don't know how many bushels you think you can get in an hour, or can you not get a
in 4 hours they do 5 bags.
Is that a bag a bushel?
A bag is that's the size.
Okay, all right.
So they're taking out around $1,250 a morning
for 4 hours. $300 an hour. I don't know how many guys are splitting that, but still, that's
no, one guy.
Whoa, one guy.
One guy. So one guy works one end, the other guy works the other end.
So one guy just comes in, makes $300 an hour, then he's done. It's like your old Pecos lifestyle. You come in, you're up at 4 a.m, but then you're done by like noon. And then I guess you go play golf or do whatever else. Living that clam pirate life. There we go. See, I mock them, but we're all doing it wrong, listeners. We should all be digging in the mud at 4 a.m. on the shores of Maine. As we keep on rolling, it is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, listeners, let's do it. Let us commence operations here on the old trading block. Easier for me to say, on the old trading block. Break down what is lighting up the tape today. And a lot of red on the screen again today. Looks like most of the major indices trending in the dark side direction today. S&P off a little over 1/3%. A Dow off about 0.5%. NASDAQ leading the charge, as it is wont to do, off about 0.2%. That means for all of our vol products, they're pretty much getting back almost exactly what they gave up on Monday. In fact, it's like we just hit the reset button. We're right back to where we were back last week on the show, because we had VIX would come into showtimes at about 29.5. That puts it up 1.9 points from last show on Monday, which, of course, it was down 1.9 points on Monday's show. So we have literally erased all of that now. VVIX at about a 91, up about 1.5 points. That's kind of hanging out a little bit higher than it was on Monday's show. VXX 23.5, up about 0.75 point. It was down about 0.75 point on Monday's show. So erasing everything there. UVXY at about a 15. That's up about a point. It was about down a point on Monday's show. So you can see where we're going here. SVIX 10.25, down about 0.5 point. And that one was up 0.5 point on Monday's show. So it's like we just hit the reset button. UVIX 1760, up 1.6 points. It was down a similar amount on Monday's show. And VolQ at about a 34 when we commenced operations here. That's up about nearly 3 points, about 2.7 points from this time last week. So a lot to unpack here on the show. Let's go around the horn again. Let's start in the land of St. Charles, where things are always nice and sunshiny and optimistic. Mr. Uncle Mike, do you have a similar gimmick going on over there in St. Charles? Are folks digging in the mud for hundreds of dollars an hour in St. Charles as well?
I don't think carp would pay as much as the clams would out in Maine. But I don't know. Is there a big market for carp? If there is, let me know. I know a great spot. Carp and catfish, we got you.
Everything is expensive right now, so I'm guessing that's all going for hundreds of dollars a bushel as well.
Well, you know what we need to do? We need to call up the exchange. We need to work on getting some carp futures and some fish futures. Let's do that.
You call up the CME, and if you need a reference, I'll help you out.
Got it. We'll get the carp futures listed. We'll do that. So anyway, so today is kind of an interesting day so far. Just initially, the market just took a bath in the early stages, but then right around 9 o'clock, we start coming back. I think we were down as low as roughly 80 points at one point in the S&P 500. We're down just under 20 right now. So it's by no means a bullish day, but it's not near as bearish as it was a couple hours ago. That's for sure. So we have that happening. We're also getting a sell-off in the energy space. So just looking at XLE, that's down 1.5%. And then looking at oil in and of itself, that's down $3 on the day, almost 3%. So we have that happening. Natural gas, that's down over 12%. So energy is in the sell column, that is for sure. So we had that. The other thing of note right now is that we're getting a little bit of a rally in the 10-year note. So the concept of where rates are, and this is what I've been following quite a bit lately, it's that, yes, the 10-year note is down significantly since the beginning of the year, but we've only actually raised rates twice. And yes, I know we did 50 bips and then we did 75 bips in the two times that the Fed's raised rates, but I don't think that I don't believe justifies the 10-year going down and selling off as much as it has. What does justify it is the threat or the expectation that we are going to raise rates again, which is very real. And that's honestly why I believe that the 10-year note has been down so much. So with that being said, the 2022 rate hikes, I believe, are factored into the price of the 10-year note right now. So with that, what's happening, it's kind of unique. We're back to some semblance of normalcy from the standpoint that stocks are down and people are buying bonds. And so we're actually getting a little bit of an inverse relationship. It's unlike what was going on for the first part of the year, to where stocks are down and just everything's down. So we have that happening today. So I think it's going to be interesting to see where energy goes. I know in Illinois, I believe it's tomorrow, the gas tax is going to go. We're going to suspend the gas tax. I believe it's tomorrow. So we have that happening. So it'll be interesting to see where demand goes once that goes into play. But that's what I'm looking at right now. And by the way, I am the proud owner of BitcoinReallySucks.com. That's all I have to say about that one.
Check it out. It's got some quality content, some great videos of Uncle Mike just giving the finger to all those crypto holders out there. That sounds like a video he'd make. Of course it does. Let's go on out here now to someone who's just giving the finger to the world on a regular basis. He is the rockingest of lobsters. Mr. Rock Lobster, sir, when you're not just, of course, signaling to those clam pirates who are stealing all of your clams, what's going on in your neck of the woods? And also, have you ever thought about getting up at like 3 and beating them to the punch, sir?
I have to say it's I have considered it.
Because they are technically your clams, right? They're stealing.
I don't know if they're stealing per se. They have basically clammers in this town have lease rights, and all the lease rights are gone. But they do seed the areas. So there's like a consortium that seeds all of the clam beds, all the low tide beds.
Okay, I was going to say, otherwise they're going to run out of clams pretty soon at this rate.
Yeah, I know. They probably have seeded my cove with 500,000 clams. So they do that and they sprinkle them around like kind of all over the place. And yeah, because they've been fishing these clam beds for well over 100, and before then the Indians did. So I don't know, 500 years. So, but now I would say it is sustainable agriculture in the truest sense of the word. I would say, what is it called? Sustainable fishery, I believe, is the term.
Aquaculture.
Aquaculture, yes. So no, you know what it is though? You're basically kind of, you're in the mud up to your knees for like 4 hours. It is not the easiest way to make money. Probably trading options is a little easier. I don't know. Maybe it's a toss up sometimes, but that's what they do. So they do have lease rights there, and they're pretty.
What you do is you find some teenagers to go out there. You pay them like $10 an hour to do the actual work, dig in the freaking mud, and then you go sell them for $300 an hour.
Yeah,
that's
the teenagers
the work.
Here are actually quite smart.
Oh, they're savvy. They won't buy into that.
Oh, go ahead. Yeah, I hear it. But teenagers, like my son actually tried it like 5 years ago, and he was like, yeah, he wasn't into it. And he ended up getting another job after that. But it's a lot of there are teenagers that do work leases for their dads, here. But for the most part, like most of these people are the clammers are entrepreneurs. So they do their thing, they come in, they do their work, and then they split. So
I bet this is more than our audience ever thought they would get about the clam industry on the shores of Maine.
What was there that discusses option trading, clam piracy, and professional wrestling, all very intelligently.
We speak to that ultimate niche of niches here on the show, but we love it. And hey, you're selling our live listeners. They're liking it. They're saying they're moving to Maine, Mr. Rocklops. They want to get in on this hot clam action.
Yes, the problem right now is trying to get a lease anymore. It is not super easy anymore.
So you're saying the shores of Maine are like the SIBO back in the late 90s. You got to pay it through the nose and wait a long time to get a lease, get a clam lease.
Exactly. It's no there's no shortage. Let's put it that like. So yes, there is you can get them, and we actually, as I recall, there is a junior lease as well in the town. But anyway, there's 3 or 4 licenses a year for that. And anyway, I digress. But one thing I would say is commerce still goes around in the U.S. Like one thing that as long as they don't break the country immeasurably, as long as we still have laws and a marketplace, commerce continues. So TOSAW was just mentioning about oil prices and gas prices getting hit. Now, the thing is with all of this, like you would hear that why? Like, I'm hearing the Europeans aren't going to get any gas. Like this is the news, but then you have to go look at the price, right? And the prices are saying that for whatever reason, demand is coming down. And I don't know if it's like let's say a technical sell-off just because it got overbought, any of those reasons, right? But you have to look at it like the price is a pretty good signal generally. And right now, like the oil stocks, they had a pretty good rally off the bottom, and now they're kind of back there again, like closer to their recent bottom. So right now, I think that's overall better for the S&P 500 if there's a loosening in oil prices. Now, I don't know about you guys, but it feels like they've been a little cheaper lately, prices at the pump. So that I think that part overall is good. But it's still but the news you hear is definitely like demand issues, or supply issues in the future. So it feels like the one hand's not talking to the right hand, but you have to look at it like Exxon's really close to its lows again of the last month or so. So weird, like again, very odd currents going through. Another thing, so there's like the oil thing. So that doesn't make any sense to me whatsoever. The second thing is like right now, from not a VIX point of view, but a realized vol point of view for the S&P 500. We're in the most volatile 30-day period we've had. And over the last 10 years, there's only been 2 periods more volatile. The pandemic, we all thought we were going to die, right? During that like 6 weeks, we're like, nobody goes out of their house or whatever. And then, and the euro crisis when the euro was going to break apart. That was the last time you had 30-day vol in the S&P 500 this high. Those two, and I recall like those are 2 pretty huge events. And I'm still like scratching my head a little bit as to why we have the sustained vol we have now. Like what's the reason? So, and it doesn't matter what the reason is, of course, like because we have that volatility. But you look at it in the only 2 periods that were higher or equivalent height, like the euro crisis was about similar, actually. It was a little higher, but still very volatile. But this is the 3rd highest period. And what's the Fed doing, right? They're raising rates and they need to. But I think there's like another, I would say the leg that makes this difficult is, and what I hope is happening, and TOSAW alluded to it before, right? So stocks were down and bonds were up, right? Let's get back to that normal relationship where, okay, we have to raise rates because of inflation, all that stuff. But bonds become a safe haven again instead of just this stupid thing that the Fed keeps issuing or buying up, or all this QE. So I think part of the realized vol, at least this is my guess, is that we're more back to the 70s style of Fed. At least the perception is that they have to step on the gas pedal and raise rates, even though it's going to cause mayhem for the government because they're running ridiculous deficits for no reason at all. We're not at war. We're not at anything. Just stupid wasteful spending by both parties. And the Fed is sitting on a mountain of government paper at this point, and we have these crazy high deficits still. And the fact that the Fed has to raise rates into all that, I think we're kind of trotting into the unknown somewhat. So we have had national debt as high as we have now after World War II. And then we had probably 20 years of relatively low interest rates because the economy was kind of, it was growing, but then we had the post-war kind of recession after that. And then things started growing again in the 50s and 60s. But like that's kind of where. So I think the market is a little uneasy over the paradigm shift. The last 15 years, since probably, or I'm going to say last 20, the market was pretty comfortable with the Fed stepping in and fixing things. Okay, we're going to fix long-term capital. We're going to fix the Mexican peso crisis. We're going to fix this. We're going to do the great financial crisis. We're going to provide this liquidity. The Fed has basically been, doing all of this QE since 2008 for really no reason, by the way, right? They did the QE. They did the first, they basically loaned people money and got paid back after the financial crisis. And then for the last, 10 years during Obama and Trump, they have been really active in trying to massage things. And I'm hoping that this is the level where they kind of say, okay, we're kind of done with that now. All right, we're going to let the market swim how it's going to swim. I don't know if they're going to do that because, of course, just today, my fixed income guy, Bill Griffo at Option Pit, says the back end of the curve now is starting to assume that they're going to go to QE by September, October, November. They're already going to be out of this regime and get back to this ridiculous funding. So I think this activity level of the Fed is causing a lot of volatility in the market. The fact that they're, I would prefer them to go back to the Paul Volcker days where they're like tough love and, make everybody spend less money, at least the government, and businesses adjust and have a slowdown for a couple of years, right? It's also a great opportunity to buy stocks. And I think that's a big thing. And I think that question is open. Maybe Mike has some comments or thoughts about that, but that's sort of where I see why the volatility is what it is. We've got the Russians in Ukraine, but we've had those type of incursions before. This is nothing new in the last 20 years relative. So considering it's so small, actually, impact, I can only imagine that this Fed sort of changing its role that's got people a little bit off their normal game. But I would welcome any comments from Mike on that.
Yeah, I mean, because we look like it is tough love is something to where it looks like we're finally seeing whether that's for good or for bad. It's like we're this giant science experiment of economies with what we're doing with raising and lowering rates. If we have this urgent need to raise rates so badly, I mean, I know it was just a bold move that in COVID, a little over a year ago, when there was the scare, and then all of a sudden, because we were starting to raise rates going into COVID, and then all of a sudden overnight, rates are zero again. And I remember that, and it was still a fearful time because with that drastic of a move, it still created a lot of fear. So I just think this is just one giant science experiment that hopefully they get right. But like Andrew said, there's still, so long as we don't ruin the country, there still will be business and commerce in the U.S. in some way, shape, or form.
Well, there's certainly commerce on the options front today. Let's see how much there is. Coming into right now here, we're seeing about, almost 750,000 contracts in the VIX right now. So this wee bit of a sell-off we saw earlier in this morning, the S&P dipped a little bit below 37.5, listeners, which, as you recall, is the level a lot of people were talking about, a lot of you folks are fixating on in our BTFD poll a couple of weeks ago. We got down there again this morning and then kind of rallied off of it, even though we are still off on the day, hanging out right around 3,800 right now. That means VIX putting up some numbers today, 761,000 contracts, so closing in on 750,000. The ADV has gone in the other direction. It's dropped 20K from our last show. It's down to 472,000. Obviously, that'll be going back up after today. SPY closing in on 5 million contracts right now, 4.85 million. The ADV is 7. So again, these kind of whipsaw-y days are generally good for broad index volume. That's pretty much what we're seeing out here. The S, 1.36 million, so closing in on 1.4 million contracts on the S right now as well. That's nothing to sneeze at. The ADV, 2.25. IWM, 524,000 contracts. The ADV, 799. You want more insight into IWM and everything going on in the futures options realm? Stay tuned in about exactly an hour. I will be joined once again by Dan the Man Grams. I know you folks love to hit him up with questions. That man knows a wee bit about the world of futures options. So tune in. That should be a fun one. If you're listening on demand, hit next on your device of choice and see if Twyfo's waiting there for you. And of course, the Qs, 1.8 million contracts right now. The ADV, 2.5 million. Fair guess that the Qs is going to hit that number by the end of the day. Now we go out to single names. A little bit of a different story. If you just glance at this list, it's kind of like a tale of two markets here. We have the bottom half, which is not doing a whole heck of a lot. The AMC is our number 10, only 162,000 contracts today, which that's kind of nothing. That's any given day. You can do $1.62 to break into the top 10. That's really kind of quiet. But then you get to the top half of the list and you're seeing some numbers. Number 9, we actually have a tie for 10 and 9. Micron is in there as well. 162,000 contracts. They have earnings coming up. Oratz folks did an very interesting deep dive into their earnings. Maybe we'll get to that in a little bit if we have some time. Microsoft, number 8, $1.67. 7 is Neo, kind of hanging out where it always is. Today it's done 177,000 contracts. Number 6, good old Facebook. Meta, what a name. 306,000 contracts. Now we're getting up there a little bit better. And then number 5, NVIDIA, 421,000 contracts. So you got to get up all the way up to pretty much number 5 before you're even talking 400K. And then we kind of go from there. Number 4, AMD, 444,000. Then it just jumps again. Our top 3 are kind of in a different stratosphere from everything else. We actually have a tie for 2. So 3 and 2. Number 3 technically is Tesla at 1.02 million. Tied with Apple also at 1.02 million. That means number 1, again, going back to the old adage that splits work, at least when it comes to volume, Amazon taking the top of the list again, 1.05 million contracts, just barely edging out Apple and Tesla today. Amazon right now off about 2%, hanging out right around 106 and 3/4. The sold off as low today is 102 and about a half today. So it has rebounded off those levels, but it's also down from the highs of right around 108.20 out there. So intriguing stuff. Also intriguing, we do still have some earnings popping off, including today, one of my favorite names, just I like to say it, Walgreens Boots Alliance. It sounds like a sci-fi name. And even just alliance, it sounds so grandiose for a stock ticker. What kind of alliance are you making? Are you getting together to fight against the Russians and drive them out of Ukraine? It sounds so grandiose for a stock ticker. Nevertheless, Walgreens Boots Alliance, WBA, popping off before the bell today. They're at 40.87, by the way. All of our Oratz reports coming in hot off the presses right before showtime. Matt knows what time we do the show. He doesn't want to disappoint you folks. And coming in right now, let's see, they were pricing in about 5%, and they delivered, look at that, about 5% exactly. So intriguing stuff. Let's see where good old WBA is hanging out right now. It is off 5.75%. So outpacing its straddle by a little bit, but not much out there. We also have, like I said, Micron coming up later today. They're after the bell. They're pricing in $56. In the past, they've moved $343. Right now, they're pricing in $386. And Matt and his team out there, they're doing some interesting, really deep dives into particular earnings announcements. They did Walgreens Boots Alliance earlier this week because they know I love that ticker. And they also did Micron. Very fascinating deep dive here. I don't think we have time to get into all the data they put together out here, but they show the range of what they're pricing in coming into this announcement, they actually said they were looking at about a 7.3% move. And they say that move was breached 4 out of the last 12 earnings cycles. During that time, the post-earnings move was outside of the implied range 6 times. In those cases, long straddles obviously were the winners. The rest of the earnings cycles likely looking good for the old short straddle play. They put that overlay with the PE here. I mean, there's a lot of data here to sink your teeth into. So getting some more in-depth reports on some of these single names, I know you folks like. We'll have this stuff up on the site for you, and we'll share it so you guys can check it out for yourselves. But this is, if you want really deep dives, you can see, I know they've been doing a lot of upgrades under the hood over there at ORATS to really try to just provide you guys with a whole just onslaught of analytics. This is an example of that. We could do half a show just on how much they're looking here at Iron Condors. They like their highest ranked trade right now in Micron is an Iron Condor with the strikes of 44.50 on the dark side and 61 and 67 on the upside, expiring July 29th. So in the weeklies, they want you to get a credit of 208. Interesting. So you're selling that Iron Condor. Interesting. So yeah, a lot in that. I'm just scratching the surface, listeners. There's pages of data on just Micron alone. So that kind of stuff fascinates you. There is more in the offing. Even though the earnings season proper is behind us, there still is a lot to unpack. They're, speaking of which, they are still monitoring for-year trading pleasure and edification on the earnings trades report. 93 long straddles, 42 short straddles, and 95 long calendars. It's a boatload of long calendars out there. Looks like they actually are adding some, they exited a long straddle today out there in AVI. So they took that one off where the stock was about $155.86. So check that out. You can learn more data about all these trades, everything else I'm talking about here. A lot more detail, theoptionsinsider.com. Meanwhile, we have to go into our next segment. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show we unleash the beast. No, not Uncle Mike. That's in the strategy block. This is where we unleash the Eye of Sauron, see what it fixes its fiery gaze upon. And Mr. Rock Lobster, I hope you feel like talking about some puts, because we got a whole heck of a lot of puts to talk about today. Does that sound good?
It sounds lovely. It sounds. I'll sink my teeth into it.
There you go. Sink your teeth into that while you're sinking your teeth into some tasty clams. Straight from the shores of Maine to your dinner plate, listeners. All right, let's go on out here. You know, you think of Maine for lobsters. They don't get the love for clams, but apparently a booming business in clam piracy on the shores of Maine. Let's see what our booming business is going on here in the option space. And spoiler alert, trifecta of puts for your trading pleasure today, listeners. First up, TripAdvisor. This is a name we haven't talked about in quite some time. Ticker symbol TRIP, T-R-I-P. Trading right now right around $18, off about 40 cents or about 2.3%. On the year, this name, ugly year for them. They were trading $40.30 just a year ago. Go figure, a name that's around travel would suffer over the last year. And it's been pretty much nothing but straight down. There hasn't really been many shining moments here on this graph at all. I guess they had a brief resurgence. They hit 2065s. They got cut literally in half on March 7th. Then they rebounded a bit. By April 5th, they got to $27 again. Hung out there for a little bit. And then they kind of been selling off again pretty much ever since June 7th, actually, is when they started really downturning again. Right to where they are right now, pretty much just ticked exactly $18. They hit their low for the year today as well, $17.44, it seems like. So rough day, rough year for TripAdvisor. I guess folks not exactly booking a lot of lodging, travel experiences, and restaurants during the height of the pandemic. So let's see what our Eye of Sauron found. Yes, I already kind of gave you a spoiler. It is puts. In particular, it's Jan. These are a little bit longer term, though. We're going out to Jan of 2024. The $10 puts. Wow. 7,500 of the $10 puts going up for $1.35. This market was decently tight, actually, for a year and change out put in TripAdvisor. It was $1.08 at $1.44. It sounds kind of wide, but it's not terrible for a relatively illiquid series. They paid $1.35 for these 7,500 times. That is a 67 vol. The stock was flirting with the 52-week lows at the time that they did. It actually had rebounded a little bit. It was 1790 when they put these up, but still lower, slightly lower than it is right now. Obviously, there are many earnings cycles between now and Jan of 2024. The next one is on August 4th. Mr. Rock Lobster, wow. This is someone preparing for some serious dark side ahead here in TripAdvisor, Mr. Rock Lobster. They're paying $1.35, so more than 10% of the value of their strike that they're hedging there. That's a lot of downside they're preparing for, and not hedging a lot of living left in the stock at that point, Mr. Rock Lobster. What say you?
Well, let's see. It's $10. Let's start with that.
So $8 below where we are right now.
Right. Okay. So I think we got to go with. I mean, you have to go with not a line in the sand put. I wonder what the Flowmaster would say.
Yeah, I think they probably bought these. That's what I'm leaning for.
Yeah, I mean, it has the whiff of paying up for as opposed to selling down. With the way I'm looking at the markets right now, although I think, to be honest, this makes much better. 13% yield on the stock, down out to 2024. I mean, it's obviously that's a long-term play. It ties up capital for a long time, but it's as opposed to just buying the stock, I guess, right? So that's a year and a half. So you get a 13% yield on a year and a half. If you sold those, the market out on that strike now is $1.22 at $1.44. My guess, that on balance, this is a purchase. Protecting your stock that you bought. This is one of those. It's a purchase that just me knowing over history, where do those puts go? They have a delta right now. They're giving the delta of that contract at 13. So they gain about a dime a dollar. So if Trip goes to 10, you make about, let's call it $1.20 maybe tops, because the gamma picks up a little bit. So those $1.35 puts get to 2 something. So does it provide a hedge? Yeah, you're stopped at $10 or you're stopped at, around that level. At least you start picking up money. But I just say you have to have a lot of, overall, you just think the Trip business is done in the long term to buy those puts. That would be my take on those.
Yeah, this person is gearing up for this, like we were talking about American Airlines. Remember a few months back, or someone thinks they're going to zero, right? Because they were just loading up on a bunch of really garbage puts. This has that same air about it. I agree with you. I'd much rather sell these, but hey, if these puts turn out to be decent, then I guess maybe not. But yeah, that's a lot to pay for, and a level. It always surprises me when a stock's $40, it sells off to 18, and then they want to hedge it at 10 after it's already dropped from 40, right? So there could be other factors at work. This could be, again, these CDS players who want to just hedge against a crazy default, or again, someone who's got prohibitions on how they have to hedge their stock. But still, you've ridden it from 40 down to 18, and at 10, that's where you draw the line. 10 this far and no further. Either way, intriguing stuff. What do you think about these Trip puts? I have to imagine most of you would rather sell them, but hit us up. Let us know what you think out there. Let's go on out now again as our Put Palooza continues. Where's our next stop on the put party here? It is going out to the cannabis sector. Canopy Growth Corp, ticker symbol CGC, trading $2.95 right now, off about $0.50 or nearly 16%. So yowzers for Canopy today. A rough day for them, rough year for them. They're off 21.25 or 87.8% on the year. This one has had really no respite. It was $24.18 a year ago. It is $2.94 today, and it has pretty much gone nothing but straight down since then, listeners. So yeah, for all the furor, all the Sturm und Drang, Canopy sector is going to be the next big thing. This one, Sundial, a whole bunch of others. Their high for the year was $25.38, pretty much about a year ago. and then it's never looked back. And let's see what we got out here today, Mr. Rock Lobster. Could someone possibly be buying puts after a sell-off from 25 down to 3? Seems like the answer might be yes. We've got 7,083 of the July 2.5 puts going up for 19.7 cents, so pretty much 20 cents. Obviously, they did them on splits. This offer was 20 cents, so they pretty much lifted the offer on these bad boys. If you're wondering, that is a 148 vol that someone paid this morning, listeners. The stock was actually a little bit lower, so they were probably panicking a bit. The stock was $2.79. It has bounced about 15 cents from there since. The earnings are not in this cycle. The earnings are on August 9th. So you're paying 20 cents. You don't even get an earnings in this. You just get a couple of weeks out here, really. So, yeah, Mr. Rock Lobster, we kind of are flipping the script. We went all the way out to January 2024 with our previous one. Now we're going pretty much very close to home here. Someone's panicking. Someone's paying 20 cents for 7,083 of the July 2.5 puts in a stock that has gone from pretty much $25 to $3 now. Yeah, these put buys are not looking good. They're not giving me the warm fuzzies, Mr. Rock Lobster.
Why would you say that? Yeah, I'll tell you what. I know people are going to say, "Oh, Andrew, you're anti-government and blah blah." But I'll tell you, the biggest, easiest way to get rid of the drug problem in the U.S. is just regulate it all. Like, look at the cannabis sector. Like, nobody's making money selling pot anymore because of competition, right? The only person making money selling pot in 2022 in the United States,
Big G,
are the states.
The government
are the states. Like, literally, I think pot sales got the state of Maine through the pandemic when like all those businesses shut down. They didn't shut down any of the pot businesses. So,
if you look here in Chicago, half the businesses that have gone the way of the dodo since the pandemic have been replaced with dispensaries. It's like the one thing that is booming.
Yeah, it is like a dystopian view. Like, okay, we don't want regular business. We just want to sell pot downtown all day.
On literally every corner.
Every corner. So, I think maybe some people think they can just make a living, talking into their phones and smoking dope. I don't know. But anyway, interesting. I'd like, as a business, like, I think, what can I say? The government's making good money. A friend of mine, my old business partner, told me about kind of the setup of like these different how they make money and how they're regulated. And it's set up very difficult. I think it's a difficult industry to invest in. I think you probably make more money selling them dirt and stuff to grow the media, to grow all the pot. But anyway, that's a fertilizer bid, right? But here, this one, like, I guess somebody's just like they're buying the puts and they're kind of tapped out, I think, on, where the stock is. That's the only thing that it appears to me. You just think that these companies are, are they, I don't know even if they're going out of business because they know they have revenue. I just don't know if they make any money. It's like, it's too hard to parse whether, like, their business models can make it, right? Just because of all the taxes and everything else. So
this put buy to me screams like somebody's just broken. Someone's like, that's it. I'm out. I'm done. I can't take this anymore. I've gone from 25 to freaking 3. I'm buying these puts now. I'm done.
Yeah. And I think, and I think that's reasonable. Like the 2.5 puts, the July 01 2.5 puts, 1,400 traded today, because the stock was down 50 to 16%. I seeing 22,000 total on the 3 and 2.5 strike July 08. 13,000 of the, these are the July 15 2.5s. I mean, this is all buying paper. Volatility's up huge. No, at least this particular kind of paper has no interest in selling a bunch of puts in these stocks. So, not a very good prognosis for the business or the industry or anything like that.
I guess if there is a bright side to this, if you are a believer in the canopy sector, you can kind of get a basket of all of them now for less than the price the canopy was just a few months ago. Just buy them all and let the regulators sort out who wins out there. But yeah,
exactly. I mean, and I think that's what's funny is too is like people like laugh, and I like, you know, in 2002 everybody's gonna laugh, but you could have bought the Qs for $19, $19. Nobody wanted to touch it. Like technology dead, internet dead, everything dead. You know, the Qs went to what, $500 or something. I don't remember what the recent high was. What, 450 or whatever the heck it was, right? So, you know, if these businesses have a chance to survive, yeah, this is the time that you would buy them. I can't figure out, to be honest, the regulation and all the stuff around them, if the models are going to be viable, like to what level are they that it's a viable business, and I can't figure it out. So I've just mostly stayed away. It's kind of like crypto, couldn't figure it out, and I felt like I was really bummed out. I missed that $100 Bitcoin in 2011. That was probably the best thing that happened to me, and I watched it go like straight up to the moon after that. So I missed it, and this, I guess. But on this time, now that they're all stocks, they're equities, so you got a shot. So, and you can buy them all for nothing. So it's just the question of, you know, do they stick around, or there's this massive consolidation, or do they go the way of Webvan, right? Which, you know, basically every supermarket does now. Just it couldn't have been a separate company, but you know, pretty much every supermarket does some kind of Webvan thing. I am harking back to 20 some odd years ago in the old days, but. Yeah, I think you're going to see. I think also we're part of the market. You know, the market looks kind of sick. We're not very far from the recent lows, and a lot of these stocks that, you know, we're riding a wave of hope and you know, of hope and change, hope and whatever, or smoking hopium, I guess. Now, like all the flames are gone. They're just embers in the bowl. So. We'll see how that all goes.
Yeah, what do you guys think about this sector, listeners? Are you buying at these levels, or do you think the whole sector is just a disaster, it's a dumpster fire, like clearly our put buyer here does, and you're getting the heck out of Dodge? Hopefully you haven't ridden it from 25 down to 2, but crazy things. Hit us up, let us know. So we got one more. Let's get out of crazy cannabis, and let's get into rental cars, because why not? Let's go out to Hertz, ticker symbol HTZ, another area that hasn't been as bad as all these others. It hasn't been straight down on the year. They actually had a spark of life. A year ago, it's right now Hertz, by the way, trading 16.14. Let's see, what is it up to today? Off about $1 or about 5.5%. So a rough day for them today. A year ago, they're trading $27. And then they sold off hard down to 15. Oh, well, it looks like they actually hit their 52-week low back then, 14.15, right? And then they touched 15 and bounced in July, touched it again in August a few times, and they rallied hard. By November 2nd, they got up to $46 intraday. Wow. Closed at 35.06, so quite the spike. That was during the height of the Omicron madness, too, so I'm not sure what was going on there. If it was just a shortage, they're charging so much, obviously, for rental cars. Something was driving them up huge. So that's why I say they're not like our other names. They actually had a brief spark of life, and I say brief because it only lasted until about November 19th. They were back down to $20.83, so they gave it all back and then some. And then they've kind of been bouncing around the mid to low 20s for pretty much the better part of the rest of the year. They got down to about 16.77 on May 10th, and then they pretty much have been hanging out down here again as well. So they're not quite at their 52-week lows yet at 14.15, but they are hanging out adjacent to those, shall we say. And it looks like somebody, once again, feeling the old spookage out here. Someone picking up 6,799 of the AUG 15 puts for $1.17. That's through the offer. They were offered at $1.14. They said, no, I need nearly 7,000. I'm going to pay $1.17 for these bad boys. They, unlike our other names, they do get an earnings cycle. The earnings announcement is on the July 28th for these. So they will get a little bit of earnings juice in there. The stock was right around here, 16.27 when they bought these. Mr. Rock Lobster, our final of our put trifecta. What say you about these paying through the offer for the AUG 15 puts in Hertz?
You know, did Hertz go through bankruptcy? I couldn't. Which one did? Oh, it was Avis. I thought there was a car maker that went through bank, or a rental company that went through. I thought, wasn't Hertz like a meme stock for a while, or some squeezy, funky stock? I'm trying to think, but maybe I'm wrong.
They emerged from bankruptcy last June.
Right. That's what makes sense. Okay, so that now makes some sense. Yeah, I seem to, I recall that there was some kind of shenanigans there, but somebody's paying through the, again, like, I think this is, I think, to be quite honest, I think some of these puts are just, people are like, it's not line in the sand. It is more of just, I think people or traders or funds or something are like, okay, this is like, we're stopping at this point. You're starting to see the uncle. No pun intended to Uncle Mike, but started to see the we're kind of done here as far as that goes. So that's what I would say with some of these put purchases. Either they're buying puts with stock because, again, this is how volatility stays high. Traders are looking for that big up move and they want protection. So they helps them load into the downside a little more.
It also helps us load into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block, the portion of the show where we break down what the heck is on our trading screens for the rest of this week into the weekend. And looks like our chat saying you can load up on YOLO if you want a cannabis ETF for $5 and some change. Yeah, I kind of expected that there were some ETFs in that space that are probably taking a hit. The ticker symbol is YOLO. That is hilarious. That is the Advisor Shares Pure Cannabis ETF trading $5.28 right now on the year. It is pretty much tracking. It must hold a lot of Canopy because it was tracked $21. This chart looks exactly like Canopy's chart. So there you go. If you want the sector, 5.25 YOLO. Oh, that just puts a smile on my face. Someone actually called their cannabis ETF YOLO. If anything makes me not want to buy it, it is that ridiculous ticker. But it also is funny at the same time. So there you go, listeners. You want the basket, you don't want to do it yourself. YOLO is there for your trading pleasure. Before we get to what we're watching this week, we do have a question of the week. We were a little bit late on the trigger finger this week, so we just launched the question of the week right before showtime. So it's more of a question of the last couple of days, I guess, of the week. But C'est la vie, we're asking you today, what asset class do you feel has the best chance to turn positive by the end of the year? Gave you three choices: equities, rates, crypto, and then the infamous other. Let's go around the horn. Let's start with the Uncles and Mikes. Mr. Uncle Mike, sir. First off, what do you think about this cannabis ETF? You going to go long it for $5? B, maybe we should have put cannabis as a sector here for our asset class. That's what the other is for. Right in with your others. But Mr. Uncle Mike, B, what do you think is winning our which asset class can turn positive poll? And then C, what are you watching for the rest of the week into the weekend?
Well, in terms of marijuana stocks, you know what I think of them? I think they're high right now. Boom.
You're a little late on that one, sir. That joke a year ago would have really been hilarious. Now
I said that joke right when pot got legal a couple of years ago, and I meant it as a joke, but apparently I was right.
Yeah, now they're low, so you gotta say that they're on the downswing.
They're
coming down. Yes, exactly.
Got it. So, I think that of the asset classes that have the best chance of coming back, I do think it's equities. I think there's a lot of rate fear right now. I don't know if I would necessarily pick bonds as it, and we don't need to belabor the point of my opinion on crypto. So that's kind of what I think. And then in terms of what I'm watching for going into next week, we went down today, we came back, and so 3,800's holding. So I'll be watching that number for sure. And then the final thing that I'm watching that I think needs to be important, we're not here on Monday. We are celebrating the birth of the greatest country in the history of the planet. I don't care.
Belgium?
What political.
Is it Belgium's birthday?
It is not. It is America's birthday.
Oh, I was off. I'm sorry.
And they might do waffles better than we do, but we do everything else better than everybody else.
Luxembourg. It's Luxembourg's birthday. I'm right this time.
It must be. And so people can say what they want about America, all the division that we have, but you know what? We're still here. and we've been here a long time. I mean, what other country can beat the tar out of other countries in World War II, and then we help them rebuild? We're a good country, folks. There's a lot of problems, no doubt about it, but we are still the best. And that's what I'm watching. God bless America.
I think that's the plot of an old Peter Sellers movie where he is a dictator of some country and he picks a war with the U.S. to lose on purpose so we can rebuild them. I forgot the name of it, but a little prescient, a little ahead of his time with that. All right, Mr. Rock Lobster, I should say. Same question for you. Actually, we'll do a combo because we're kind of coming up against it. A, what are your thoughts on the YOLO ETF? Still brings a smile to my face. B, what do you think is winning in our poll here? Equities, rates, crypto, or other? If you have an other, hit it. And then C, what are you keeping an eye on for the rest of the week? Reminder, long holiday weekend. Uncle Mike said it is Luxembourg's birthday, so no show on Monday.
Right. So, yeah, I think equities would do. Equities of anything, and most likely. I'm not super bullish on bonds where they are right now. What is everybody else saying? I to be honest, probably stocks. I would say everybody else is saying stocks. I don't even know if they'll be positive for the year. I think they'll be higher from where they are because I'm smoking hopium thinking the Fed will do the right thing and stay the course. That's what I hope. But as far as the YOLO name, I'm glad they just went for it. They said, "Yep, we're just going to name it. We're going to name it YOLO and go the whole 9 yards." So I'm glad that they had the oomph, the chutzpah to do that.
Yeah, if ever a ticker screamed, it can go to zero and you can't get mad at us, it's YOLO because it's going to go up or it's going to go to zero. That's what a ticker like YOLO can. By the way, right now, you guys are right. 42.1% of our audience saying equities, which is weird because this is the same audience that 40+% of you a week ago said you were holding out for lower levels in the S&P before you BTFD. So obviously you think we're trending lower in the near term and then I guess turning green towards the end of the year. That would be quite the rally. That would be an extreme rally from the lows here. But hey, Don, Mr. Negative usually said he thinks the stocks might be green on the year too at the end of the year. So crazier things have happened. Rates 36.8%, crypto 15.8%, 5.3% of you saying other. If you pick other, you got to tell us what your other is. You can't just choose other. So some of you are cheating, which is no bueno. That music means we are done. No show on Monday, as I mentioned, listeners. So enjoy yourself out there. Let's go around the horn really quickly. Let's start with the Uncle of Mike's. Mr. Uncle Mike, folks are going to be home. They're going to be away from the market celebrating Luxembourg's birthday. They're going to want some content to inform and entertain themselves. What do you got for them?
Check out my YouTube channel. Just type in St. Charles Wealth Management. Just put a new video out yesterday on a call spread. If you're looking for a financial advisor who loves America and loves other countries as well, but loves America more, feel free to check out my website, stcharleswealth.com, and follow me on Twitter at Mike TOSAW, TOSW.
Give him a follow. The man is cranking out the content. Not quite on our level, but he's doing his ablest. And Mr. Rock Lobster, sir, if folks want something to inform or entertain themselves over the weekend, what do you got?
Yes, I relaunched my OP mentoring we are doing a portfolio protection routine. So if you want to learn how to trade options with your stock portfolio, much like to protect the downside, learn how to use dividends to go buy puts and create a more defensive portfolio that has upside potential for the rest of the year. That is what we're doing in Option Pit Mentoring now with all of the other, what I would call more active trading things that we teach. So for people that want to learn portfolio management skill and use options to help do that, to limit risk, you come to Option Pit, sign up for Option Pit Mentoring. The program will be open until I think Thursday of next week where we close sales. But that's your opportunity, so pop on over and check it out.
There it is. The Rock Lobster actually sending me pictures of the Clam Pirates right now, live photos of the Clam Piracy going on right outside his door as we speak, listeners. Check him out over there in the land of the pit if you want more information on all of that goodness. Unfortunately, that's going to do it for us here on the Option Block today. If you're one of our live listeners, hang out, relax. You don't have to go anywhere. We'll be back in a little bit with none other than Dan the Man Gramsler to break down all the madness in the world of commodities and futures options. Spoiler alert, it's a lot. Then we're back here again tomorrow, noon Central, 1 p.m. Eastern, to break down the mad week of volatility on Volatility Views. After that, with Mr. Saad from Shift Search to break down the week's worth of unusual activity on Options Oddities. Then we're off again on Monday for Luxembourg's birthday. Back again next Thursday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.